I'll say this. Is it a canary in the coal mine? Absolutely. And I think Snap is not just Snap specific. And the fact that now you're talking about companies hiring freezes, laying people off, cutting CapEx. I mean, that goes across a spectrum of sectors, and I think it's worrisome. I'll say this about Snap quickly. Even if they don't make the $7 billion in revenue they're expected to do next year, say it's $5 billion, right now at current levels, it's trading about 4 times revenue, which I don't think is ridiculous, and I think it's a valuable asset. Traded 10 times normal volume today, 280 million shares, reeks of capitulation to me.
It's one thing to say Pinterest was down, PubMatic was down, all these sort of ad-related names were down. But when you talk about Apple being down as much as 3% at one point in the session, finishing the day down by just about 2%, Dan, I mean, these are concerns that really strike the nerve of Wall Street right now. These are the things that we're all worrying about, that we haven't seen the full impact of rising rates. We haven't seen the full impact of supply chain issues, et cetera.
Yeah, and we've been talking about Apple. I mean, when you think about how they rely on a Chinese consumer, but they also rely on the supply chain and the manufacturing that exists in China, this is a really important time for them because sooner or later, they're going to have to go beyond them saying that we are supply constrained, right? They may have to say we have a demand problem in China. That might be relative to some sort of geopolitical situation, and we might see a hit to their margins. Who knows? I mean, I guess at this point, I don't disagree with Guy whatsoever, a canary in the coal mine. I think there's lots of different ways to extrapolate it. We hit it on the desk last night as the news was coming out. I'll just say this. Go back just a few weeks in mid-April when Netflix surprised. The stock was down 35%. They were telling you they're having a sub problem. They were telling you they were having a demand problem. What are they doing? They want to go to advertising. And what did Snap just tell us right now? That advertising is a tough digital model at the moment, given what they're seeing as far as the consumer. So to me, I do think we are not closer to the end of this, people. I mean, it's just saying this is going to be something that roils, I think, lots of different parts of the consumer market over the next few months.
I mean, the interesting thing is that we seem to be falling on the same concerns over and over again. And they're coming from different places, like a Walmart and then a Target and now with Snap. And yet it's the same basic concern that we continue to decline on.
Well, Mel, it's growth over inflation.
Right.
And that's the concern that's moved to the front of the dashboard here. And if you look at Treasury yields and what happened to the curve day, by the way, steepened, which actually means you saw more rallying from the short end, where the view is that the Fed can move less. If you look at the Fed fund futures, we've taken off about 15 bips in the last 3 or 4 days. Look, the market makes the call. The market's the one that we listen to, and the market said what it said today. But Snap is not Facebook. Snap is not Apple. I mean, Snap is a company that going into the crisis was having a lot of problems, still had a lot of prove it to me story. This is a company that was a $3 stock in 2019. I'm not going to tell you that Snap is the reason why we should all be worried about growth. I'm going to worry about housing starts that were down 15%. I'm going to worry about dynamics that we're seeing from other companies. But this was a day where we actually already got the green shoots from the post-recession rally in a lot of consumer stocks. I mean, look, Walmart was higher. Consumer brands were higher. Certainly defensive consumer staple stocks were higher. And I know that's not a reason to get excited. Those are defensive moves. But to say that, this is a time to totally hunker down, I think there's opportunities. I've actually added to Walmart in the last couple of days, and I do think that Snap, yes, has a major impact. I understand the move on Facebook, but I do think we have to be careful about saying Snap is an indictment of the entire growth story.
Okay, so I can understand the argument in terms of not extrapolating Snap to the overall market, the overall macro trends or consumer trends. I think Tim makes a good point. I totally understand that. What I do think you can make a bit of a read-through to is the surprise of the consumer still to be there. It was only a month ago that Snap came out, kind of knocked the cover off the ball, guided forward, and then it's a month later where they're guiding down and telling us that they're now seeing, I guess, this quote-unquote unforeseen softer demand. I think that it's one of two things. Either companies are reluctant to admit that there is some softness there, or this volatility or surprises isn't just endemic to Snap. And that is where I think it probably has implications for the overall market.
Well, I mean, earnings season closed right at the end of March for most companies, and here we are. We've got a couple months where we don't really have a read yet, and so that
they're the first
right,
read.
That's the fear that in between the last print and the guide that was given at the end of the first quarter, and now things have changed, and I think that is what Dan. I mean, that
real
was
time.
what Snap encapsulated.
Hey, listen, on this set last week, Brian Cornell, CEO of Target, actually said the same thing about consumer behavior in such a short period of time. So if we start seeing this rack up, we had this conversation, I think, a couple days ago on the desk. It's like, well, most companies keep telling you that demand's there, the consumer's fine. We were talking about Jamie Dimon talking about consumer credit, and yesterday, but that is the case until it's not. And I think that you have to think about this as a bit of a mosaic. This is not a buy the dip economy, and it's not a buy the dip market right now. We're in a different market. And if you go back 2 years, okay, when we were in the black hole of the pandemic, what did it take? It took trillions of dollars of monetary and fiscal stimulus to get us to V reversal. This is not going to V reverse. As it relates to Snap, I bought a little bit today, and I'll tell you why. The last time it was trading at $12.79, where it closed today, was April of 2020. At that point, they closed the year with $2.5 billion in sales. They had like a low 50s gross margin. They were still unprofitable on a GAAP basis. Here we are 2 years later, expected to have over $5 billion, $7.5 billion in sales next year. Margins are supposed to be up 10 points, okay, from that period or whatever. So if you're telling me that the stock was overdone back then in the throes of that, now it got up to $80. I believe in the next 5 years, in the next bull run, a stock like Snap will once again have a $100 billion market cap at some point.